Good Friday morning and welcome to Opening Bid. I'm Yahoo Finance Executive Editor Brian Sozzi. We are moments away from our big interview with Starbucks Chairman and CEO Brian Niccol, which comes right after the company's closely watched New York City Investor Day. Brian just left Yahoo Finance's HQ. Here's a sneak peek on what he told us about their turnaround.
We really focused on getting the operational excellence back into the stores. And really what that's all about is our Green Apron Service program, which is all about becoming a great customer service company again, and then also setting our partners up so that they have the tools and the time to do their craft and connection with our customers. And I think that's at the foundation for why you saw the transaction growth.
I almost forgot doing that interview. Then I realized I just did it moments ago. But before I hit go time on that one, we have a few housekeeping items. First, President Trump is set to announce, or he did announce, former Fed Governor Kevin Warsh as the next Fed chairman, possibly, which he came out and said this morning, as potential to succeed Jerome Powell. Warsh isn't seen as the most dovish of the picks Trump had teed up, and we are seeing bullish bets on gold and stocks unwind a bit. But I really want to dig into tech because there are two themes emerging into the weekend. One, if you are a big tech player hyping up AI and don't deliver in a big way come earnings time, you will be punished. Microsoft and ServiceNow getting served up lessons on this front. Microsoft had a staggering $357 billion in market cap slice off on Thursday, following a quarter where cloud sales fell short and guidance was not perfect at all. ServiceNow was also shellacked because its quarter failed to impress through and through. Talk about ServiceNow. Both stocks still acting weak today. In fact, all the ServiceNow quarter did was fuel the view that software companies will be eaten alive by AI. This narrative has hammered software stocks in recent months, from ServiceNow to SAP to the mighty Salesforce. Check this out. The S&P 500 Software and Services Index is now at a 9-month low. On the other hand, not all tech stocks are being treated equally. If you are a big tech company showing you can make money off AI, you will be rewarded, like Meta post earnings this week. If you are a big tech company with some major fundamental catalyst that the street is discounting and say as much on earnings day, you will be rewarded. Enter Apple, which had a blowout quarter for the iPhone. Think on this for a second. Apple's iPhone business added more than $16 billion in sales year over year. It's huge. I like the Apple earnings call too. Far less corporate jargon than Microsoft's call and more bullish on the outlook for margins for the first quarter and the new AI deal with Google. Memory stocks like SanDisk and Micron are on the move after Tim Cook warned of higher prices and supply chain constraints. Here's what Big Tim said on that new tie-up with Google.
You should think of it as a collaboration. We'll obviously independently continue to do some of our own stuff, but you should think of what is going to power the personalized version of Siri as a collaboration with Google.
You could just hear the excitement in Tim Cook's voice on that deal. Yeah. All right, here on the Opening Bid Roundtable, Dan Ives, Wedbush Securities Managing Director, Global Head of Technology Research, Melissa Otto, Visible Alpha Head of TMT Research, and our very own Senior Reporter, Ines Ferré. Dan Ives, coming to you. Apple, you like this quarter?
Look, it was a phenomenal quarter. I mean, if you think about what we saw specifically with iPhone in China, I mean, that was robust tailwind, services strong. Look, but I think the issue with the stock, I mean, investors, it's all about AI. Investors want to see what the strategy is, what the monetization. Obviously, it's Cook keeping it, sort of close to the vest. But I think that ultimately is really going to be the key to why, we're bullish. And I think what you see is this is almost a sleepy, sort of pretty massive upgrade cycle that's taken place.
Dan, are you in a Wedbush office? I've never seen you in the office before. It's a lot for me to take in, Dan.
Look, there's a lot going on, Saz. I had to, I wanted to kind of blow your mind. So I'm in the office today. And, again, it's Friday. Who knew? Well,
count my mind as blown. Melissa, over to you. Dan brings up a good point, talking AI and Apple. How much AI initiatives for Apple, AI, the broader environment, how much of that is priced into Apple stock, you think?
Yeah, it's a tricky one. First of all, happy Friday. Thanks for having me on. I mean, there's a couple of interesting things going on from the quarter. I mean, they beat Visible Alpha consensus on the top line pretty nicely and also at the gross margin. But what really stood out to us was China. China beat consensus by over 20%. So I think, when we think about AI and we think about the second half, the question's going to be what is going to be the catalyst for those numbers? What's going to drive top line? What's going to drive further upside in the gross margin. Is China going to be sustainable, and are they going to pull something magical out of their hat in the second half around AI?
Is that magical thing, Ines, you think it's this Google Gemini? I mean, Big Tim, he didn't want to get into the financial ramifications of this type of Google, but I mean, it's hard to tell how excited he was. That's just Tim Cook, but he sure seemed excited, and he sure seemed to think this could be a big lift to Apple over time.
Yeah, and it may be the perfect partnership for them, at least for the time being, and them having such a massive quarter. This could give them the runway, so to speak, for a even broader AI strategy later on. So even though investors were so concerned about AI last year, this could be a stopgap measure, as Dan Howley had been mentioning earlier, and this could be the perfect fit for right now. I thought that what was interesting was the memory comment on the earnings call, because that seems to be sort of a bifurcation that we're seeing now in the market with respect to some of these memory names that have been skyrocketing, and the demand, the bottleneck when it comes to memory.
You're seeing there around the screen, that move in SanDisk, Dan, I mean, holy SH star T. I mean, I don't know how do I put it? I mean, if you have missed this run in SanDisk, I would even say Micron, do you buy, or is this just going to end badly?
No, look, it's a super cycle in memory. I mean, that's the reality. I think if you look at what's happening, and we see it with like SK when we're there in Korea, Micron's part of the AI 30 list, in terms of that we focus on. Look, I think this is it's picks and shovels, right? In other words, like, this is a fourth industrial revolution. And I think investors, what you see in SanDisk today, what you've seen in these numbers, it shows, it's still early days in this just massive cycle.
Melissa, what really impressed me with Apple, a lot of things, the iPhone revenue, but Tim Cook got on that earnings call and he said, you know what, we're going to drive higher margins in the first quarter, higher than the street expected, even with these memory price, these higher memory prices, these memory chip complaints. Isn't that the ultimate buy signal on Apple?
I mean, ultimately what was a surprise was the gross margin, especially coming into the outlook. I mean, they guided 48, 49% gross margin. Visible Alpha consensus was 47.5, and we're currently at 47.5 for the second half. So that's what the market has priced in. So as my other two guests alluded to around memory, this is the question. Is Tim Cook going to be able to manage the supply chain and memory prices in a way that enables them to maintain and sustain those 48, 49% gross margins, or is the 47.5% the real number?
And as I promised, I'm going to get you on precious metals in a second. Hold on just a moment. Dan, while we're cheering Apple here, Google's in report soon, probably a good quarter for them. I'm going to talk up Gemini. On the other side, this move lower in software stocks, SAP, Salesforce, ServiceNow, this has been abysmal. I mean, do you try to pick a bottom here, or do you just stay with the winners like an Apple and a Google?
Look, software, it's a guilty till proven innocent. And I think ServiceNow and obviously Microsoft and others, I mean, this is just on the street right now. It's almost a do not enter zone. Now, I think a lot of that maybe is overdone, specifically for some of the cybersecurity names, for even Salesforce and others. Look, it comes down to monetization fees. And that's what the street wants to see here. And I think what you're seeing is really a bifurcation in tech. It's kind of the haves and the have-nots. And that's really what's playing out across tech earnings season.
Ines, wild moves in precious metals the past 24 hours.
Incredible what we've seen with the moves in precious metals. We're looking at now gold that's down about 5%. It's at around $5,000 per ounce. You just had yesterday morning, it was touching around 5,600. So it's a massive move to the downside. Silver as well, down 13%. Mike McClone over at Bloomberg is basically saying you may have just seen the top on silver, and this could be for years now that you won't see those same silver prices as you've seen. He's been warning about this massive speed in this rally that we've seen. And we're also looking at other metals as well that are down. I mean, you're looking at copper. Also, copper was up around above 14,000 per ton in London, and that has also moved lower. That doesn't take away from sort of this narrative that we've been hearing about, is the demand for these metals, for the demand for copper that you're going to need for data centers, for electrification, et cetera. But look, there's inelasticity when it comes to that, because a data center is not going to stop being built just because you've got higher copper prices. But nevertheless, a lot of this has to do also with China's speculative trading as well. So analysts had been warning this parabolic move. You can't have these types of parabolic moves without having some type of a downturn at some point.
Melissa, humor me on this. We started this session today with news that President Trump has nominated Kevin Warsh to be the next Fed chairman. If you're out there, and I'm going to get this question for people, so I'm going to put it right to an expert like you. No pressure, right?
No pressure.
No pressure. Does Kevin Warsh, how much of a factor should he be when you're trying to pick a tech or media stock to invest in? Should you even be thinking about who the next Fed chair will be? Why or why not?
I mean, ultimately, it's going to be about policy and their view about interest rates. Interest rates are an important dimension to the way that the market thinks about asset allocation. So I think if his view is to lower interest rates and take a much more dovish stance around rates, that may be a signal for small cap. It may be a signal for some of the riskier, more unique areas of the market. It may also be pretty bearish for the dollar. That we've been in an environment where the dollar has been very strong, and so if we see that start to reverse, it could change some of the dynamics in the market.
All right, we'll have to leave it there. Stay warm, y'all. Thank you so much for this fiery analysis to kick off the day. Appreciate it.
Thanks.
All right, coming up, Starbucks CEO Brian Niccol is in the Yahoo Finance house. We'll be right back. Starbucks sent a message to Wall Street this week with its earnings and follow-up Investor Day. You would be wrong to bet against our turnaround. Here's what Starbucks Chairman and CEO Brian Niccol told us moments ago at Yahoo Finance HQ. Starbucks investors have been waiting for clear signs of a turnaround under restaurant turnaround magician, Chairman and CEO Brian Niccol. This week, those signs percolated. Positive same-store sales in the U.S. in the most recent quarter. Strong growth in China again. At a New York City Investor Day, Starbucks signaled it could keep the turnaround on track through new drinks, new food, an upgraded rewards program, and even remodeled restaurants. Brian Niccol is here with me at Yahoo Finance HQ. Yahoo Finance senior reporter Brooke DiPalma is here as well. Brian, there's no coffee. I mean, you didn't bring any coffee behind us. Come on, man.
I think we got an opportunity.
Yeah, let's get that outfitted. But look, it's been a busy week for you. Yeah. Earnings calls, investor days, and I was trying to think if there's one ingredient to what investors saw with the positive same-store sales in the U.S., the improved transactions. Is it faster lines? Is it protein coffee? Is it our friend Tressie Lieber bringing back glass bears? Like, what was it in the quarter?
Yeah, look, I think it really is a combination of a couple things. One, we really focused on getting the operational excellence back into the stores. And really what that's all about is our Green Apron Service program, which is all about becoming a great customer service company again, and then also setting our partners up so that they have the tools and the time to do their craft and connection with our customers. And I think that's at the foundation for why you saw the transaction growth. And then you mentioned Tressie. She's done a phenomenal job from putting the brand back in culture, and I think leading in culture, from fun things like the glass barista to, my personal favorite now, the protein latte. That really attracted both rewards customers and non-rewards customers to come into Starbucks again. And then when they got in there, they had just a great experience with our partners.
Let me follow up on that one real quick, Brian. What's the average wait time now? When you started, what was it, over 5 minutes or so?
It was. So in cafe, unfortunately, we were probably closer to 6 minutes. And now we are below 4 minutes at peak when you come in for the cafe order. If you go through the drive-thru, you'll get in less than 4 minutes during peak. And then obviously on mobile order pickup, we want to be on time and accurate. And that's really what the Green Apron service model has been all about, is setting our partners up with clear operating standards, but then also giving them the tools and frankly, the rosters and the hours to then do their craft and, create that human-to-human connection.
And Brian, the look and the feel of Starbucks is different. And you mentioned yesterday at the Investor Day that the overturn of a remodeling could just be overnight even. You also got the cost down. So what can consumers expect as far as the look and the feel goes?
Yeah, look, I'm really excited about this. We're calling it an uplift. I think my grandparents called it a zhuzh. But look, we need to put great seats into our stores. We need to give you a great atmosphere. And we can do that overnight. We've got really talented designers that are looking at every single store to figure out how we put a great seat back in, give you a great experience where when you come in, it feels warm, it feels welcoming, it's a place you want to stay. Then at the same time, we have a huge opportunity to build a lot more stores in the United States and frankly around the world. And we want to make sure we're building the right store. And so that cafe that we're going to build is going to be just that. It's going to be a warm, welcoming coffee house. In a lot of cases, it'll also have a drive-through, but we always will have a great coffee house.
And it seems like you're sort of leaning into the nostalgia factor here. You have the 1971 coffee coming back. You're also having a reserve card. I don't know if you have your gold card still, but they're coming back out with the black reserve. You have to earn the points. You have to earn the points to get it. But it seems like you're leaning into this nostalgia, leaning into Pike Place. One, is that the factor here? Are you leaning into the nostalgia factor? And two, have you talked to Howard Schultz about what you're doing?
Well, look, first, I would say it's not nostalgia. We're just leaning into the soul of Starbucks. And look, Starbucks started in 1971 in a great little quaint coffee shop, Pike Place. I don't know if you've been to it in Seattle. And we want to bring that to life. And the 1971 dark roast is exactly what that is. And then I think the whole idea on the rewards program is we wanted to make the program more personalized. With the technology now that we have, the use of AI, we can actually be more personalized and give people the rewards that match up with how you interact with the brand. That's why we're going to have the reserve level, the gold level, and the green level. Look, I hope everybody becomes a reserve card-carrying Starbucks holder because that means they are really engaged with the brand and a big fan of the brand. And then look, working at Starbucks, I think it's a real fortunate fact that I have the access to Howard, so I can hear how did this company go from a handful of coffee shops to 40,000 iconic around the world brand. And look, he's been always available, and actually he's been a big supporter of the team that I put together and the strategy around Back to Starbucks.
I thought this notion of a third place that Howard created was done and dusted. I mean, why do we have time to sit in a Starbucks like we used to and read a book and drink coffee?
Look, not all the time, but there are those moments where you do, and I think it is the soul of the brand. I think it is a halo to all those other occasions. I do also believe people prefer to go into a place than go into a place that's soulless and has no real connection or experience. So whether that's you're going through the drive-thru and you see it through the window, or whether it's a mobile order pickup, where remember, you're coming into the cafe. I shared this at Investor Day. Just in the last month, 60% of our customers had at least one transaction where they came to our counter. That doesn't include the mobile order pickup. So look, the cafe is a big brand component of who we are. And I also think too, it is human nature. You want to actually connect. Even if you want to be by yourself, you prefer to be by yourself with a lot of people around you.
One of the interesting things with coffee chains, and it was, I think at a competitor, I saw a slide deck like a decade ago, I think it was Dunkin'. I mean, their transactions go right down in the afternoon. Now, you said at Investor Day, we're focused on building another peak in the afternoon. How large is that opportunity if you are able to build a strong, consistent afternoon business with wraps, energy drinks, and even different types of matcha tea?
Yeah, look, I think the afternoon is a multi-billion-dollar opportunity for us. I think we set out initially to win the morning. We're actually doing that. We already have an afternoon business, but I just believe we are not totally to bright on what the menu, both in food and beverage, needs to be. And I think now with a great cafe, people actually have a reset moment in the afternoon. Some days you're on your way to go get a workout, so you need protein, right? Or maybe you need more energy. Or other days you're like, man, I'm having a day, and you're gonna enjoy a Frappuccino. But it's like, we can have the food, we can have the beverage for that reset in the afternoon. And if you actually look around the world, everybody around the world has a reset moment. And I think the United States will actually really appreciate having a reset moment. And I think we can do that with our capabilities around beverages and food. And, I think we can have a peak that's just as powerful in the afternoon that we have in the morning.
Brian, you're also at this moment in time where consumers are using GLP-1s. About 25% of U.S. households have at least one GLP-1 user. When you think about innovating with protein, how difficult will that be for you to do with your supply chain? It's not like people are cutting up ingredients like they were at Chipotle.
Well, look, I think actually we're positioned really well for this because what I've noticed, and as I've understood the behaviors associated with people that ultimately are on GLP-1s, you end up with more snacking or smaller meals. And more protein forward, more fiber forward. And so we can do those things. And then also, look, I think complementing food with a drink like that is right in the wheelhouse of that trend of using GLP-1. So that's another reason why I'm really optimistic. If we can start doing more protein forward solutions, I think you might have heard Tressie mention protein balls and potentially wraps that are a little bit more protein forward.
Ball?
You never had one?
No.
Oh, you haven't seen these? These are usually it's like oats, peanut butter,
dates, syrup. On the go.
Okay.
Yeah.
Fair enough.
Don't worry. Welcome to the trend.
Yeah, thanks. So, Brian, the time we have left, I know you've had a busy week. You and I go back to Yum Brands Investor Day in New York City. I mean, it had been like 10 years ago, whatever it was.
I think it was a little longer.
Maybe a little longer than that. Okay, but then Chipotle, and now it's Starbucks. I was surprised this week with that filing on your security. It's something you and I have never even talked about. And full stop, this has to suck for you to have to go through like this where you're trying to drive a turnaround. Like, how is this role, not that Chipotle was a low profile gig by any stretch of the imagination, but how has this role changed your daily life?
Yeah, look, that's probably something I underestimated coming in. I knew it was a global iconic brand, but I appreciate that people are passionate about our brand, but there are also things that I just didn't expect. And, you wouldn't think you would need the additional security, but it turns out you do, because unfortunately, a lot of crazy things are being said out there. And look, the good news is, on the whole, I do believe, I'm an optimist, so I believe sometimes it's more, and I hope this is the case, more just words than really true beliefs or actions. But look, it's a little concerning, and I appreciate that our company takes it serious, and it's important for me to make sure that everybody's safe.
Does it make your job as a CEO just even more hard? Because look, you're thousands of stores, a brand we all know, and in many respects, many people love, and you're trying to drive a turnaround. And do you walk out of your house like looking left and right? Like, is that what it has come to here? Because this is wild stuff.
Yeah, look, this is why you don't have to do that, because I know I've got a great group of people doing what they're really good at on the security side of things, so that I don't have to worry about that. And I'm fortunate that, again, our board and ultimately our company takes it really serious. And it took a little bit for me to, frankly, warm up to the idea. But yeah, it's just something you got to adopt, and hopefully down the road it becomes less necessary.
Still able to get in those 5 a.m. workouts?
I do. That's a big part of I think keeping your health is a really big piece of the puzzle in order to keep up with the demands of the job.
All right, Brian, stay sane, stay safe, and keep those glass bears coming. Brian Niccol, good to see you, and Brooke DiPalma, good to see you. I'll see you on the show very shortly.
Yeah.
All right, and that's it. We'll be right back.